Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. This is a channel that focuses not only on trying to find these exceptional companies, but critically also considers valuation. And using both that fundamental framework as well as valuation, I looked at Didi Global, which IPO'd last week, and I said, look, I'm going to pass. The business model's too hard, and the valuation is too rich for my personal journey. And personally, I'm very glad that I called that out. I view it as a dodging a bullet on that one. And for a lot of investors that didn't dodge the bullet, that said, hey, this seems like an exciting Chinese IPO. And look, there were a lot of, very public figures saying, hey, you should get in on it. It's been such a negative experience in such short time that a lot of investors are wondering, like, hey, should I just avoid Chinese stocks altogether? And I'm going to share some thoughts on that when we talk about what's gone on with Didi Global. So the first part is to talk about what's going on with Didi Global. Then next up, should you avoid Chinese stocks altogether? What is my take and what's appropriate for you to consider on your own journey? So to understand what's going on with Didi Global, so last week they IPO'd and they issued, as part of the IPO process, you start off by offering 317 million ADSs. So this was on June 30th, listing 317 million shares at around $14 a share. So about $4.4 billion worth of proceeds. And here it is, 2 days after its IPO, kaboom, China blocks Didi from app stores days after the merger. I mean, this is just such a big deal where here it is, their official company press release where Didi announces the cybersecurity review in China, where pursuant to the announcement posted by the People's Republic of China's Cyberspace Administration Office on July 2nd, Didi is subject to cybersecurity review by the authority. During the review, Didi is required to suspend new user registration in China. This is a big deal. This effectively cuts their growth off at the knees for their core domestic market, which is about 95% of their revenue, effectively saying, hey, we can't get any new users. And apart from this suspension of new user registration in China, Didi maintains normal operations. So saying like, hey, well, at least we can keep using our current users. We just have to remove our app from the App Store and we can't get any new users. And this raises the big red flag. Is this just a function of cheating U.S. investors? Was this just some sort of heist or scam to cheat U.S. investors? How much did investors know? How much did management know? How much was telegraphed? So let's talk about these elements. This is just such a souring experience 2 days after an IPO to have this sort of like, oh yeah, huge development, huge big negative development. And so folks are saying, hey, is it even worthwhile for me to consider Chinese stocks? And, as a perfect example of the folks that unfortunately did get burnt, it was just a few days ago, last week, Jim Cramer putting the Mad back in Mad Money, where he was talking about how if you want to speculate on a Chinese IPO, you've got my blessing to bet on Didi. I would try to get as many shares as you can, the Mad Money host said. So, I mean, look, there's a lot of retail investors that sort of might be following, Jim Cramer and saying, hey, I'm going to go in, buy. But you know what? That's part of the reason why I do this channel is it's not a buy. It's a, hey, let's try to be analytical about this. Let's see what's the risk reward, what's the valuation, what's this business, what's their, are they unrivaled? That's the key framework. And so was this a complete shock? Was this a complete heist, in terms of this $4 billion being issued effectively at what is arguably a very inflated valuation if they're getting cut off, if their growth is getting cut off at the knees. And so here it is. This is actually from their prospectus. So this is what investors knew. And so they talked about how in April 2021, the State Administration for Market Regulation, together with the Cyberspace Administration and the State Administration of Taxation, held a meeting with more than 30 major internet companies in China, including us. All companies were effectively required to conduct a self-inspection within 1 month to identify and correct possible violations of anti-monopoly, anti-unfair competition, and other, rules and laws like taxes. Our self-inspection uncovered a number of areas which could be deemed problematic from the compliance perspective, including potential anti-competitive practices in certain ancillary services, such as electric vehicle charging, disclosure of driver income, and related policies. inaccurate marketing and promotional materials, potentially unfair pricing in the community group buying business, which has ceased to be our consolidated subsidiary. So they're saying, you know what, we actually, in doing the self-review, came across a bunch of red flags. We cannot assure you that the regulatory authorities will be satisfied with our self-inspection results, or that we will not be subject to any penalty with respect to any violations of anti-monopoly, anti-unfair competition, or pricing advertisement. So this was in the prospectus. This was as they were going public. Investors knew this. If you were reading the risks, the disclosures here. So I view this as honestly a pretty darn clear warning saying like, hey, yeah, the Chinese government's cracking down, and they said, hey, you got to make sure you yourself are check yourself before you wreck yourself, man. And they're saying, you know what, we checked ourselves and we may have wrecked ourselves. We had some problems. And here it is, looking at what the newspapers are now, effectively corroborating that thesis, which is that Chinese regulators suggested Didi delay its US IPO. So this is really interesting, effectively saying like, look, Didi not only got the warning, but weeks before Didi Global went public in the US, China's cybersecurity watchdog suggested the Chinese ride-hailing giant delay its initial public offering. I personally, while it didn't spell that out in the prospectus, you do sort of read between the lines when it's like, oh yeah, there were a number of areas where there's probably a problem, and the regulatory authority might come back to us, and urged to conduct a thorough self-examination of its network security according to people with knowledge of the matter. This, in my opinion, paints quite a different picture. Now, keep in mind, this is after the news came out that effectively they have to stop growing in China. They have to cut off their exposure from their respective app stores. But this is a big deal. So when I look at this, warning in the prospectus, I look at these headlines effectively saying that management knew, it does sort of change the locus of who's at fault, who's in control, who's at fault here. And when I look at it, number one player at fault is, this isn't, a lot of people are going to point their fingers at the CCP, the Chinese Communist Party, and say, hey, this is an example of overreach by the Chinese Communist Party. That's not the way I'm looking at it, folks. I'm looking at this as number one, this is Didi's management, which is effectively thumbing their nose to the Chinese Communist Party. If the Chinese Communist Party is going, and keep in mind, this is a single party system. This is not like multiple different parties that you can, maybe play off of each other. You can't go parent shopping here. Here it is. You got one parent. You got the CCP. And if you thumb your nose and they say, hey, don't IPO, you should expect some blowback. And so this, I would say, number one by far is Didi management here. So there should be severe repercussions here. And I view this as, at this point, completely uninvestable. No matter how cheap it were to get, I couldn't, just based on this factor. Unless you had a complete change out of management and all the aspects that I talked about in my first video on Didi in terms of the business model. The number two, I would say, are the investment bankers who, yeah, they probably say to themselves, look at this juicy deal. I mean, you're getting, 5, 6, 7%, maybe 8% off of billions of dollars in new stock going public. I mean, this is juicy fees for all these different bankers that they're cutting it up. And, they say, hey, well, yeah, there's maybe these big problems with regulatory authorities, but hey, if we just disclose it and effectively say it's a problem, then we wash our hands of it. In my opinion, this deal, this outcome, it just further soils the reputations of a lot of these bankers where, at this point, what do you expect? Going through the business cycle, seeing what's gone on, everything from the bankers, there's no such thing as a completely clean company, being sold by any of these bankers. You need to, verify pretty much everything that they put out, read the risks super carefully, to see if there's any sort of these legalese red flags that they're calling out. And that's honestly, that's part of this journey and this channel is I'm trying to call out like, hey, here's this thing I read in the footnotes that might be of interest. But as an aside, look, this may not be the end of the world for Didi shareholders. A lot of folks are like, oh my gosh, it's game over. I mean, it wouldn't surprise me if you see a lot of capitulation in Chinese stocks this next week because of this, because they're effectively saying, oh my goodness, the Chinese Communist Party can come in at any time and effectively blow up your business model. And as I look at this, it's like, well, wait a second. If you probably have a turnover in Didi management that effectively says, whoops, like, yeah, you can't thumb your nose to the CCP if they tell you not to IPO. That simple. So if that's the case, you have a change in management, you have effectively new management come in and say, yes, we are going to do whatever the Chinese Communist Party wants. We will pay some big fines. We're going to make sure all of this data is locked down. And to be fair, I mean, from a cybersecurity perspective, this is, I would argue, quite sensitive data when you're thinking about, hey, you know where people are, you know when they were there, and if you have enough people using the app, you know who they're with. And keep in mind, this app has hundreds of millions of users on it. So you do have very sensitive data, then overlay it with driver data, which is effectively incomes. So yeah, this becomes super sensitive. You know, you could have potentially like bribery data of like, I know you were here with this person at this time. You know, there's all sorts of repercussions there. So for them to say, hey, this is an important cybersecurity issue, I get it. That makes sense to me. That said, if they start behaving, it's possible that they get relisted and they start growing in the future. So I don't view it as a, you know, cataclysmic end of world event for Didi shareholders. That said, as I've said, I wouldn't want to be involved with Didi at this point. So should you avoid China altogether based on seeing this experience? And let me do a quick plug, you know, before answering this question, because that's a sour question that a lot of folks are wondering, especially after this IPO. But, you know, if you're interested in finding potential multi-baggers, that's the whole purpose, not only of this channel, but also my personal journey at unrivaledinvesting.com, where the first week of the month, I call out my full portfolio. And then during the month, I call out at least one idea where I'm looking at something and I'm saying, hey, this is a potential multi-bagger, something that could potentially go up hundreds or even thousands of % over time. There's also a dedicated Discord community where it's, you know, Q&A and we talk to each other, share different ideas. So that's all part of unrivaledinvesting.com. It's also a great way to support this channel if you'd like. Also, if this is your first time tuning in, I do appreciate you hitting that subscribe button. If you're already a subscriber, I do appreciate that thumbs up. So thank you so much for watching. Thanks so much for subscribing. Let's dive into answering that question of should you just avoid Chinese stocks altogether? And the reality is, the first part is that everyone needs to have their own journey. I mean, there's several parts that go to this. You know, for me, as I've called out in several videos, I, for one, own some stock in Alibaba. I also own several other Chinese tech-related plays. And so when I look at this, there's a few reasons why. One is just valuation, where I look at it and I think, hey, this valuation's pretty darn compelling. And that's the reason why. And I called that out in the Alibaba video where I'm like, hey, this just seems cheap. That's worth considering for my personal journey. That said, everyone's going to have their own journey. You have to figure out what level of risks you're comfortable with. I can totally understand some people saying, hey, I don't want to have any of this. That said, I personally like having a diverse global exposure, some of which, a good chunk, is in Chinese tech. And so then the next component is there is a bit of an ick factor here right now, and Michael Burry famously called this out, I think in his 1990s letters, talking about, but this was before he became the you know, the Big Short famous investor, but this was back when he was a doctor, you know, also crushing the markets, you know, as a doctor in training. And he, you know, called out how he likes stocks with an ick factor, ICK ick factor, because there was something that just bothered most investors that caused them not to buy. And when you didn't have that natural buyer step in place, it caused valuations to be more compelling. I think you're starting to see that with Chinese stocks, where there's this sort of Chinese discount where people are either saying, hey, I don't know when I'm going to get sideswiped by the CCP, or if the numbers are just bogus. So you do have that sort of concern, fear with Chinese companies. There is that ick factor that you do need to get over if you're going to invest, or say, hey, can I trust these numbers, and will the Chinese Communist Party sort of blow up my thesis overnight like they did with Didi? And then I think the third component, you know, it's worthwhile for me to share here, just because I have talked about Chinese stocks a lot, I've talked about Alibaba several times, is that first of all, I'm an American citizen, and I am super grateful to be an American citizen. I can do these videos and speak a completely open mind, free thoughts. You know, I'm sharing 100% honest take with you, and that's part of my value proposition. And honestly, I don't think I would be able to do that if I were in China. I wouldn't be able to give an honest take. So I'm super grateful to be able to be here, you know, be an American, and to be able to say, hey, this is a crappy company, or these are red flags, or like, hey, I'm really gung-ho about this. This thing seems super exciting. So I'm super grateful for that. Even though I am talking about Chinese stocks, it is worth calling out. I'm super grateful to be American. So then the next component, so not only figuring out what's appropriate for your journey, I would say if you decide to play, and no matter what investment game you're going to do, you need to see reality as it is, not as you want it to be. You have to see reality as it is. And the reality is, if you are investing in Chinese stocks, it is a one-party system. One-party system. That means your main customer, no, it's not the millions of people looking for a ride somewhere with Didi. Your number one customer is the CCP. You need to make sure they are happy. After they're happy, then you can have a business model that works. That's the reality of operating in China, in my opinion. And, so if you have something where you're going to thumb your nose and say, you know what, we're still going to IPO this, even if you're pumping the brakes, even if you're saying, you know what, I want you to do a self-review, you need to check yourself before you wreck yourself, and you come up with all these potential red flags. That in and of itself shows you you need to align yourself with the CCP. And honestly, that's part of the reason why I've invested in some of these Chinese tech plays, where I'm looking at these companies and I'm effectively saying, hey, are they aligned with the CCP? Has the CCP indirectly given a green light on these companies? Is there some sort of data point, some way to read the read the tea leaves that gives me a signal like, oh, the CCP is fine with them, or the CCP is happy with what they're doing? So I think in every country, you're going to have different cultures. There's going to be different setups. There's going to be different drivers of the business. China is a very different culture than the United States, very different rules of law. You need to understand this is, you have to not upset the CCP if you're going to be playing here. That's the reality as it is. What you want might be different. So if you're going to be playing this game, you need to see it as it is. And in my opinion, you need to find companies that align with that reality. Now, for example, I have called out Alibaba, which, as I've disclosed, is something I own, and they've recently paid a multi-billion-dollar fine. So then the question becomes hey, are they just in the penalty box forever? Will the CCP close them? And that's part of my view with looking at Alibaba is well, wait a second. This is one of the gems of China's e-commerce. Are they really going to completely shutter this business? And so that's part of the question when, as you own it. It's not my largest position by far, not the case. But you're looking at this and you're sort of saying, well, how long is this going to be in the penalty box? What else is going to happen? Because keep in mind, the fine that they had was pretty minimal. A couple $1 billion relative to a company that's doing, $20 billion plus in free cash flow a year. So anywho, that's something to think about in terms of aligning yourself, saying, hey, is this company still going to stay in the penalty box? But also, look, each month, if you go to Unrivaled Investing, you decide to become, join the Unrivaled Nation, join this journey. Each month I do call out potential multi-baggers. I called out healthcare play, I call auto parts related plays. And these are companies where I'm looking at potential multi-baggers going up potentially hundreds or even thousands of percent over time. So if that's something that you would be interested in, go to unrivaledinvesting.com. And if this video was helpful for you, considering not only I'd say the huge burning dumpster fire that you see with Didi, what's gone on recently, as well as this broader concern of well, wait a second, should I just avoid Chinese stocks altogether? If this video has been helpful for you, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Thanks so much for watching.